Hey guys, in this video I'm going to tell you how to use my Kelly curve indicator on TradingView, and what this indicator is going to tell you is how much you should allocate or how much you should leverage in any asset in order to maximize your returns over time. Because most people invest with 1x leverage and they don't even ask why. It's because it's what's already readily available, but 1x leverage, it doesn't mean that it's optimal for your returns. Sometimes you should invest with less than 1x leverage if the asset is very volatile. Sometimes you should use a bit more than 1x leverage if the asset where you are investing, be it a stock or an index ETF, if the returns are quite decent and the volatility is not too big. And why is that? Because leverage will increase your returns, okay? Upside and downside returns, but they will also increase volatility. But what the Kelly Criterion and what my Kelly indicator is going to tell you is where is the sweet spot between growth and returns and the leverage. Because if you are, in most cases, for example, if you are investing in S&P 500 index ETF or NASDAQ ETF, if you are using 1x leverage, you are leaving gains on the table. But if you are using a little bit, just a little bit more of leverage, you are optimizing your returns over time, and up to a certain point, that leverage will not increase volatility too much, and you'll have the optimal returns. Okay, so let me go ahead and share the screen with you. Here what we can see, by the way, if you don't have a TradingView account, you should have a TradingView account. You can open a TradingView account for free. I will leave my affiliate link in case one day you want to have a TradingView paid account, and if you use my affiliate link, you'll get a discount, and I also get some kind of kickback. But you can just simply go ahead and open a free account. You don't need to have anything paid to use this indicator. But anyway, once you have your TradingView account, okay, you can load NDX, which is NASDAQ 100, here on the chart, and go to indicators and search for Kelly Criterion curve. And you have here Kelly Criterion curve by Henrik Saint-Pierre. You add it to the chart. And then what I want you to do is to change a little bit the settings. Let's open settings here and let's put a look back period of 2000 days, okay? You should use a look back period that is long enough for us to have a sample of data that, shows you all the reality. If you put a look back period that is too short, it's going to give too much emphasis to the last few days of trading and might be a distorted view. But okay, I have added here, our indicator, the my Kelly curve, which is the first time this type of indicator is available on TradingView. And what you can see here is that for optimal, the Kelly optimal for NASDAQ is 2.99, 3x leverage basically. This will be equivalent to a QQQ, TQQQ, NASDAQ ETF. And many people invest in QQQ. I have talked about QQQ in my course. I hope you have taken the course already. But QQQ can also be fairly volatile. So if you want to invest with a little bit less volatility, still you can use something that is around this. Can you see here optimal sizing? Optimal sizing is between 1 and 2x. So anything between 1 and 2x or even 2x using the QLD ETF will give you pretty good results. Now, let me show you how these ETFs would look like over a long period of time. Let's say I extend here the period, let's say from, let's take a look from, let's see, if we put from 2000 and, let's put 2016, okay? 2016 will give you a 10-year period, okay? Approximately 10 years here, okay? And instead of NDX, let me put the QQQ, which is basically almost the same, but QQQ is the ETF with 1x leverage, okay? And we put here the QQQ and let's change settings, and I will adjust data for dividends. So let's have dividends into account. And now I'm going to add QLD. QLD is a 2x leverage ETF for NASDAQ. And let's see what are the results. Wow, this is interesting. Okay, so over a 10-year period, while QQQ, including dividends, returned 532%, not bad, right? You multiplied your money in 10 years by 6, pretty good. But QLD returned 1,600%. So this is a 17x return on investment. It's significantly better. And you can also notice that although QLD is just 2x leverage, is a 2x daily rebalancing leverage, it delivered 3 times the returns of the QQQ over the same period. This is pretty interesting data, right? And now you see that my Kelly indicator totally makes sense. It shows that above a certain leverage, you'll get really the optimal returns. Okay, what if I put here the triple Q, TQQQ? This is a 3x leverage ETF. This will, as you'll see, has way more volatility. Okay, so you see here huge swings. But what the math tells us, what the Kelly Criterion and my Kelly curve indicator tells us is that this 3x leverage will give you optimal returns. Okay, and as you can see again here, the triple Q will give you 2,800% return over a 10-year period. So it's really, really good, but you need to know, it's very important I highlight this, that if you invest right before a crash, you'll be toasted, okay? That's why you should never go all in into leverage ETFs. You should allocate a small percentage of your portfolio depending on your risk profile, okay? If you are young and you feel like risking a bit more, maybe you can put 10, 20, 30, 40%. I currently have over 50% in my leverage ETFs. If you are closer to retirement or you are a bit more risk averse, maybe a 5 to 10% into these leverage ETFs can give you very interesting returns, as you can see here. Because even if you invested only, imagine 10 years ago, you put 90% into QQQ and you put 10% only of your portfolio into the triple Q, the TQQQ. And this 10% that you put in TQQQ 10 years ago will now be much, much larger than the 90% that you put in QQQ. Interesting piece of data, right? Just by allocating 10% of your portfolio into a leverage ETF. You can also do the same for S&P 500 ETFs. Let me show you the data. So I'm going to change here. Let me add our indicator, the Kelly Criterion curve. All right. We have, oh, it's already here. Okay, and now I'm going to show you for the data for SPY, for the S&P 500 ETF. Okay, I'm going to remove here QLD and triple Q. And what this tells us is that over the last 2,000 trading days, the optimal leverage will be 3.75. You should never go to this Kelly optimal because, again, it can be risky, can be volatile. If there is a crash tomorrow, you will not be happy by having this volatility and by the results of declining by 3x, okay? But what you see here, again, is that SPY, which is 1x leverage, and if I add here SSO is the 2x the SPY, and UPRO, which is 3x SPY, 3x the S&P 500. And now let's put a time horizon for us to understand here the big picture. So I'm going to put like approximately 10 years. And approximately 10 years, what do we have here? Well, we have also pretty interesting results, right? We have, while SPY returned over the last 10 years 300%, SSO 700%, and UPRO 1100%. So this is basically the power of leverage ETFs, and very importantly, the power of understanding the math behind using a certain level of leverage, okay? Using more than these levels of leverage shown here by the indicator will be illogical, will be totally a gamble, okay? And using leverage in very volatile assets is also a gamble. Please don't do it. But using leverage in investments that you know that have a high probability of giving you returns, that have a good expected value, that have also contained volatility, it's always a good option. And if you don't do it, you are basically leaving gains on the table. Let me add here, for example, I'm going to show you an example. If you add the Tesla stock, what's going to tell us is basically going to tell us not to use leverage on Tesla. Let me adapt here this for you to visualize. So it's telling us that the optimal leverage for Tesla stock is 0.94, 1x basically. So it's telling us don't use leverage on Tesla because Tesla is already volatile enough. What if I put here Bitcoin? Can you try to guess what's going to be the optimal leverage on Bitcoin? It's also 1x, 0.9x. So, and you see here the 2x, it shows that will be very bad to use a 2x leverage on Bitcoin. And I don't know if you're paying attention, but in November 2025, lots of people got liquidated and lost everything on Bitcoin because they were using only 2x leverage on Bitcoin. So this 2x leverage can be a disaster if you are using a very volatile, if you are investing in a very volatile asset like Bitcoin. I would like to invite you to use this indicator, explore in different assets. I have recently, for example, I have invested leverage in Berkshire Hathaway, okay, Warren Buffett company, right? And I have invested leverage because our indicator tells us that it's kind of safe to invest in leverage in this stock. And you know, Berkshire is basically a holding company. They have been around forever, right? And they have a huge pile of cash at the moment. So I see it as a low risk to invest in Berkshire Hathaway with leverage. And to use this leverage, I basically invest in leverage ETFs. Now, very important piece of data when it comes to how to use leverage. Okay, I don't use margin accounts. Margin accounts are dangerous. You can get liquidated and can get expensive. So for me, margin accounts is out of question. Then you can use futures potentially. If you know how to deal with futures markets, you can use futures. Futures can carry additional danger and can be more volatile, and it needs some maintenance because you need to roll over the futures every time it reaches maturity. So for me, and I think for 99% of the investors, leverage ETFs are the best solution because it's a buy and hold and you don't need to worry about rebalancing, you don't need to worry about expiry, immaturities and margin calls. And also the costs of leverage ETFs are in most cases lower than other options such as futures or margin accounts. Okay, if you have any questions, please let me know. I know this is a very complex topic, and that's why I talk about leverage ETFs and leverage all the time in my community. I have a 4-hour long course in my community. I hope you already took that course because I cannot compress it now in 15 minutes. And also, please go to my TradingView profile, check the free indicators that I have there, including this Kelly Criterion indicator. It's totally for free. Play around with it and let me know if you have any questions. All right, I'll see you very soon.